Hey guys, welcome back. So in this lecture, we're gonna learn about trend lines and angles. Okay. So most traders they pick two swing lows and they draw a trend line, like connecting them, and they draw a trend line, and they call it you know uh, they think that it will work for all of their trades. But let me show you what goes wrong there. Okay. So for instance, when I do that, okay, suppose I connect these two lines, all right, these two swing lows, okay. So here you can see when I connect these two trend line, it is working here, working here, okay. It just like worked there, but missed it. But then, this was hit, this, okay. Now, what if I want to draw the trend line here? Okay, I can draw this, or I can draw this. So these are very subjective, okay. Like, I mean, there is only one explanation of this, that like, okay, this two line is connecting. So basically traders are hoping that it should work. But that's not always the case. Sometimes they work, sometimes they don't. All right. And in trading, nothing works 100% of the time. So what we are doing in this course is I am giving you a solution, a mathematical solution to draw this automatically. Okay. So indicator will do all the heavy lifting. Okay. So, so let me just enable these, and let's just see these are the problems with manual trend lines. Okay. They pick two swing lows, draw a line connecting them, and they call it a trend line, right? Which is the problem with this is it's very subjective. Everyone draws it differently. Okay. And it changes based on zoom level, it changes, okay. And it's very time consuming. Manual drawing, it is time consuming. If you draw on one chart, one market, it might not work for another coin or another stock or another futures market, and it's prone to bias. Okay, what you want to see, you just like draw it, and I can actually show you that example. Check this out. So um, here, see, a lot of people have like drawn these, these trend lines. So their analysis might be different from yours, and that's why trading becomes very subjective. You see this trend line coming up there, okay, this here, supply line, this, and this takes time, guys. Like if you do this, again and again, like it takes time, and this is just for euro, US dollar. What if you want to do for analysis for, British pound, right? Then it's gonna be different, okay. So So what the solution is basically mathematical angles. So we just use mathematics to like draw our trend lines. Okay. And this indicator, it calculates the mathematical angle and plot multiple trend lines automatically. Okay. So advantages of this is it's very objective. Okay, same for everyone. Consistent, don't change with zoom. Automatic, calculated by the indicator, and multiple angles provides a grid. So I'll just go ahead and enable this so that I can show it to you. So let me just enable this. So I'm just drawing one by one, which is 45-degree angle. You see, and this trend line is coming from here. All right, this is on for 5 minutes. If I go on 15 minutes time frame, you can see this is coming from here. Before the week, for the 5 minutes, is coming from the start of the 3-day candle, which is here, 4th of January. All right, and you can see that here we are looking the market with the wave, right? So we need to see if the market is holding above. Here it didn't, so we just go and see. Here it did hold, right? And then boom. So when it came back, then boom, right? And the same goes for the downtrending as well, right? So this is drawing automatically. Okay, we we just need to enable that. And So they are objective and it's same for everyone. Okay. One by one line, the foundation. Okay, as I showed you in the setting, this one by one line, this is the foundation of this. Okay. So the most important trend line is that one. Okay. And you can just trade out of that, and you can make profitable trades. Okay. So let's talk about that. So it's the most important angle, and one by one means y equals to x. Okay, that means price equals time, and it's a 45-degree angle. Okay, it shows the balance trend for every unit of time. Price moves 1 unit, and that's a balanced trend. Okay, you can see one by one line. X-axis is your price, x-axis is your time, and this is y equals to x line, 45-degree angle. This is the slope of it. Okay, now when price is above one by one line, okay, that means market is uptrending, bullish. Okay, so this is a one by one ascending line from a swing low. Okay, you see, so this means price above this line means we are in a bullish trend. Okay, and price below this trend line, you see here, that means it's bearish trend, or trend is weakening. Okay, as you can see, as it touches there, it comes down. All right, so you can see one by one ascending, price above, bullish. All right. Now, one by one angle, it acts like a gravity. Okay. It acts like a gravity, and price respects these levels. Okay. So whenever price reaches these trend lines, it acts like support and or resistance. Okay. So see here, it tries to go to the midpoint, bounces back up. Again, it trades above and then boom, right? So it does act like gravity, and in action, price goes back to the one by one line, bounces back, you see, and pulls back again, and then bounces back again. And this line is acting as support. You can see here, right? See, and then here again. And when it breaks below, it just goes down. So this is the example that we saw. And when the one by one line breaks, you can see this is a warning signal. You see, it broke here, warning signal, pulls back, and then continued downtrend, right? So this is the warning signal, and trend might be changing, and that's what happened. Okay, signal, price breaks below one by one ascending line. You see, this is one by one. So this is one by one ascending line. When price breaks below, that's a bearish signal, and the uptrend is losing momentum, and we can see this live happening. And it's beautiful that, like, I can show it to you live. The example. I'll talk about the last trade that I took there. We added there, and, like, it we enter on this breakout, and then market tries to go up, which was fake out, and then, like, it comes down. Okay, I'll tell you what happened there, but just to show you what happened, you see this 1 hour. In 1 hour, you see that the higher time frame that we talked about, 1 hour descending trend line was coming here, and as soon as it hit, that's why this big momentum change happened. Okay, so that's why we always look for higher time frame confluence. All right, so let's move on. This is what we talked about. Now, the multiple angle grid. Uh, this is we don't just use one angle. Okay, we use multiple angles to create a grid. All right. So accelerating angles. Okay, so one by one is your balanced trend, which is 45-degree. Two by one is your accelerating trend, steeper. Okay, so I'll just go ahead and do that. And you know what? Like, I'm just closing my eyes. I'm just going here. Let me just do a live analysis. Okay, so I'll just click here. All right, I'll close my eyes, go back a couple of months, or I don't know, just scrolling down, and I'll just stop right here. Okay, I'll click there, and it happened there. So now I'll just do the analysis. Okay, I don't know what happened in the future, so I'll just add the trend lines now and we'll see. So I'll just add this 2 by 1 accelerating trend. You see, this one is steeper. So you'll see here 2 by 1 happening. Okay, so see the market is around here. All right, and we can add 4 by 1 as well. Strong momentum, very steep. You'll see when I add 4 by 1 will appear here. You see, so as soon as it hit, market just accelerated upside. And then 8 by 1, this is the extreme momentum and almost vertical. So you'll see when I do this, you see extreme momentum. All right, so you can now, I'll just let it run and just you just observe how market behaves when it comes to those angles. Okay, those trend lines. You see here it tries to go up. So like now the new 3 days started and see it's trying to go up on that angle, on that trend line. Okay, you see 1 by 1 hit, boom, right? Now it's coming down here, again hit, then it's trying to go up. Okay, all right. Now you see here tries to go up there, and then the 1 by 1 angle broke, right? This 1 by 1 trend line broke. All right, and you can see as soon as it broke, that's a warning sign. Then price pulls back there, and then it continues down. Okay, so we have to, if we had entered long here, so this is our trailing stop. Okay, that's the beauty of these guys. Like it gives us trailing stop. It gives us pretty much everything that we need in order to succeed in trading. Okay, so if we had entered trade long here, because see it was uptrending and the support was here. So confluence wise, if we talk about confluence, see 50%, right? And your 1 by 1 trend line, right? So it was having that. So that's a confluence. If we enter long, this is our trailing stop, and we would have exited out there. Okay. So so you can see, and if you had like want to take profit, or you can take on the 2 by 1 or 4 by 1. So what I'm trying to tell you is, whenever market hits those and those trend lines with 2 times speed, 4 times speed, 8 times speed, the market will gain momentum like that. Okay, that much momentum. And decelerating trend, decelerating angles, we can draw those decelerating angles as well. Um, so like I can do that. Can come here and then I can draw these on this one ascending plots, right? I can do 1 by 2, so it's gonna come below that, right? You see it's flatter, right? And 1 by 4 is another weak momentum. You see me weak momentum, right? And 1 by 8 is almost horizontal. You see this one. So this is a time, guys. So like whenever trend line, whenever you see this trend line, these are the time. Okay, and whenever market comes, that means time has come for the market to make a decision. All right. So I'll just let it run and you see what happens there. Okay. Just observe whenever market hits those trend line, what happens. You see here tries to take a support and then it went up because we were already in uptrend. Okay. And if you see here, this is 25% level in uptrending market. This is very strong support. All right. So I'll just let it run. And you see it's holding on that one and it just went above, hit the profit target there, and then again it's taking support there on the half angle. Okay. So my point being is the market moves, but it moves slowly. And like, it tries to go from one angle to the next angle. And that's what we're going to talk about in the next in the next slide, which is the complete angle grid. Okay. So see, we can draw multiple lines at different angles, create support and resistance grid. You see this one, and you see 1 by 1. This is 2 by 1, 4 by 1, 8 by 1. This is 1 by 2, this is 1 by 4, this is 1 by 8, right? And you can see that visually here, right? And what I'll do, I'll just let it run so that you can observe while I explain it to you, okay? So price moves from one angle to the next angle. You see, price when this angle hold, it went to the next angle, okay, which is 1 by 1. When this one didn't hold, it went to the next one, which is half. When this one didn't hold, close below, came up, and then went to the next one here. So this is 1/4 angle. And this didn't hold, one next went to the 1/8. Okay. So yeah, it moves from one angle to the next angle. Okay. And this is what the law of angle is. Okay. Let me explain that. When you see here, when it made new low support, right? It goes up and it is standing on the 4 by 1. Okay, first it went above the 8 by 1. Okay, you see the market just accelerated upside in very short period of time because it's moving very fast. Then pullback happened, went to the next angle. Okay, this angle hold, so market went 8 times 4 times faster because it's standing on the 4 by 1 angle. Okay, so now market is closing, it didn't hold this one, so now it's gonna move to the this one, this angle, half 2 by 1, sorry. And notice this 1 by 1 descending trend line is broke, so it's gonna take support from there. So we'll see what happens. You see, it took support and then boom, right? So so this is the um, this is the principle here, and the what law of angle says is that when price breaks one angle, it moves to the next. Okay, you see, when price breaks below, it comes here, it goes above. If it can go there, tries to go above but couldn't, so it comes to the next one, right? It's holding this, so it will go to the next one, and we'll see what happens. All right. So that's how the principle works. See, it tries to go up, it couldn't go to the next angle, closes below, so it goes to the next one. Okay, and it's gonna take support from here. And see, this is what happened. Now it tries to go up, couldn't, so it closed below 1 by 1. This is a warning signal, so it goes to the next angle here, right? So this is the principle, guys. And you can see it's taking support of horizontal and trend. So you know, it takes that and it moves from one angle to the next angle. Okay, and this is how it does. Okay, now this example I'm showing you on 5 minutes time frame. Okay, you can do it on 15 minutes time frame. All right, you can do this example in 15 minutes time frame. You'll see that on 15 minutes time frame it was just coming down here, you see, and this angle will get activated. So we'll see what happens there. Okay, you see, it got activated, didn't close below, but then it came to this angle and then this angle hold, so it's moving up. All right, you see, moves up, comes back again, and then it's gonna go up. See, and then new week started. Okay, so this is the law of angle, guys. Okay, when price breaks one angle, it moves to the next one. All right, see, so price is expecting 1 by 1 ascending line, then it breaks below. Where does it go? To the next 2 by 1. Sorry, here it's like descending 1 by 1, but you can see, like, if it breaks, see, um, if your descending trend line is there, like for instance, it breaks below that, so it is taking support there, but it should be like 2 by 1, like half. Okay, when it breaks that, it goes to the 1 by 2 basically. Okay, so price doesn't just fall randomly, it moves from one mathematical level to the next. All right, so visual law in action. So price moving through grid, watch how prices respects these levels and moves from one angle to the next, which I already shown to you. Okay, and trading at the 1 by 1 line. The setup is, if we are in uptrend, price is above 1 by 1 ascending line, the trade is entry signal, price pulls back to the 1 by 1 line, confirmation, price bounces with strong volume. Okay, stop is below that 1 by 1 line, and target is the next angle, which is 2 by 1. Okay, so I'll just let it run and you observe what happens. Okay, so see, let's just wait for the market to come here. It didn't, the wave didn't close, guys. Okay, the wave didn't close. We are waiting for the wave to close above. Okay, so see, here now another chance came. If the wave closes above that, this trend line, then we can take the trade. Otherwise, it's just gonna move to the next angle, which is half. And like see, you see here now this is a really good example. See, this trend line was coming down, so this was holding here, here, here. And as soon as we broke, we took support on this 1 by 1, and the market just popped right back up. Okay, if you had entered trade there, right? And you can see volume as well. This is what we're talking about. Price bounces with strong volume. You see how strong volume this is, right? Very strong volume. All right. This would be your profit target. So this is like 1:4 trade easily. All right. So this is what I'm talking about. Okay. And if you had entered long trader, you can take some profit there, some profit there. Okay. So yeah. So when the 1 by 1 line breaks, now this is a descending trend line. So trend change warning. So now this is just still on ascending trend line, but if it breaks, well, it's for that. Okay. When price is above 1 by 1 ascending line, then it breaks below with strong volume. Then we look for then what to do is exit long trade. That's a trend change warning, and we wait for price to reach the next angle. Okay. Um, and the which will be on, if we are talking about ascending, sorry, there is one typo there. Okay, if we are talking about ascending, then the next angle would be the half of that, right? So 1 by 2 angle. Okay, so we wait for price to reach the next angle. Okay, and potential short entry when price respects the descending line as a resistance. So like it's talking about this one, if you are here and if it is respecting this, you can take short there. Okay, so yeah, you see. Now I'll just let it run. You can see now as the market is developing, all these trend lines are potential support and resistance level. The market has to go up. It has to overcome this resistance. See, now the this angle hit, and see market reacted there. You see, boom, right? And when it breaks above, came back here, right? Now we'll see what happens there. Okay, if it holds there, then it's good. No, otherwise, it's gonna move to the next angle, and this is what happened here. Okay, see, this was your warning sign. This was like capitulation, meaning like a lot of stop losses were hit, right? And like we can actually just exit the long trade or like just enter short there. That's what it's telling. When it breaks, go to the next angle. Okay, so all these angles are calculated automatically. Okay, with mathematical precision, right? And this is the geometric system advantage, guys. The geometric indicator calculates all these angles automatically from swing points. Okay, as you can see. All right. And what you get is you get multiple trend lines at different angles, and support and resistance grid automatically created. Okay. And no more manual drawing needed, calculated from swing points which have mathematical precision. Okay. So this is what professional traders draw by hand, and we now have the capability to draw them automatically. Okay, so let's do some visual complete grid example. So each line is a potential support and resistance, as I showed you. Okay, and if you come here, the description of this indicator, you can see these. Okay, and you can read about it. All right, you see all these angles: 1 by 1, 2 by 1, 3 by 1, 4 by 1, 8 by 1, 16 by 1, and then shallow angles, descending angles. All these are very important. Okay, so you can see these trend lines, right? This is the price on the uh, mm, this one. Okay, price bounces out of this angle 2 by 1. You see, big change happens there, and then this is the geometry of the market. All right, price moves in mathematical patterns. So key takeaways from this lecture is okay. Let me actually talk about a couple of things first. See, uh, here, on 15 minutes, this is 15 minutes time frame. So this trend line was coming down, and you can see. And now let me just draw the descending trend line as well, so that you can understand. 2 by 1, you see, 2 by 1 coming there. I can draw 4 by 1. Okay, you see, I can draw half of that. That's all I need right now. Okay, and you see, market came to the point, guys. I mean, like, can you imagine? Like, see the mathematical precision of it, and from there it came down. Now, when the trade that we took trade first on 15 minutes when it came here, and then we added here, okay, because we were looking at 5 minutes time frame. Sorry, and it added 5 months. So I'll just add 5 minutes. You see here, this is where we added. So guys, see, this is what I wanted to actually show you as well, that higher time frame confluence matters. And as you see, whatever angle I explained to you, or trend line I explained to you on higher time frame, on ascending channel, we can see those in descending channel as well, descending trend line. And when this trend line hit, market didn't overcame that. Market just, like, drops to the next angle and just breaks. Okay, if I would have seen that, I would have closed that trade. So when you combine these both angles, both trend lines, right, you get this complete mathematical, geometrical picture of the market that professional traders have when they trade. Okay, what do you think? Why do you think this precision happened? You see, so all these hedge fund who are like running algorithmic trading system, okay, they're watching those levels, right? And as soon as it comes there, a lot of market order hits, and I can actually prove it to you. You see, like when I go to the footprint, you see, zero here. What it means is that, like, absorption happened, and, like, you see, like, it tried to buy, but the offering wasn't available. Okay, just market just dumped a lot here. You see, people tried to buy, but the institutional sellers or algorithm is just observes all those order, and it just takes down. Otherwise, this candle would have closed above. Okay, but it didn't. It closed. It would have closed near the high, but it didn't. And the next candle, you see, delta is minus 45. Delta is now minus 33, right? So this is how it works, guys. Like, like all those traders, institutional traders are looking for these levels. Okay. Um, so key takeaways is manual versus mathematical. Manual trend lines are subjective. Okay. Mathematical angles, trend lines are objective, and they are calculated mathematically. Okay. Now the 1 by 1 line is 45-degree angle where price equals time, and price above 1 by 1 is bullish, price below 1 by 1 is bearish. Okay, so you can see that visually here. Okay, multiple angles, we can create a grid of 1 by 1, 2 by 1, 4 by 1, 8 by 1. All these angles are accelerating, and when the market comes to those angles, it has this, like, momentum effect. You see, it hits 2 by 1, and the market goes to the next angle there, right? Just goes there. When it couldn't go up, it comes to the next angle. Okay, now it activated this one, the descending one. Now it goes to the next angle, and from there it goes to the next one. Couldn't go up, so it came down to the next one, right? So they are working interrelated. Okay, they are like coexisting at the same time, giving us supply and demand and supply lines automatically. Okay, so we talked about law of angles. When price breaks one angle, it moves to the next one, and price moves in mathematical patterns that we already seen. Okay, and markets move in geometric patterns. Some math professional traders used same math professional traders use modern automatic execution. Okay, that's what we are applying here as well. All right. So this is really a professional grade trading indicator that we can utilize to take trades. Okay, and you can definitely go ahead. You see another precise one, right? So you can go ahead, read through this, you know, description and come to agree with yourself. Um, how can you use this system? Okay, so that's it from this lecture. And in the next lecture, we're gonna do some bar replay practice. Okay. So you now have all the tools, structure, higher time frame levels, support, resistance, and trend lines. Now it's time to put it all together in live practice. Okay. That's the goal of this course, to train your brain, to train yourself to, be good at trading. Okay. So another example that I would like to show is, see, as soon as it hits this like 25% level, you see it market reacted. So that's the mathematical precision that we are gonna be training ourselves with. Okay. So this is where it gets real, guys, when we do bar replay practice. And I've shown you the trailer of it. I'm gonna go much more deeper into explaining why a certain event is happening and what's the reason behind that, so that whenever we enter trade, we can, manage the risk and trade live effectively. Okay, that's the goal. All right. So in this lecture, I showed you geometry in motion, and showed you that market moves in geometric patterns. The one by one line is where price equals time, a balanced trend, and when price breaks one angle, it moves to the next one. So master these angles, okay, master these trend lines, in order to succeed in trading, okay, because these are the trend lines. When market reaches there, the time automatically activates and it has to move in certain direction from one angle to the next angle. Okay, so yeah. All right, guys, in the next lecture we're gonna do some bar replay practice, and I'll see you guys in the next one. Thank you.